Folks, just doing a sound check. Can you let me know you're hearing me okay? Awesome. Thank you. About 6 minutes, guys. I'll be up here in just a few minutes, just preparing a couple of things for the show. Looking forward to it today. They're definitely hammering gold as I thought they would. We're going to dig into all the details. Thanks for coming. Yeah, we'll be starting here in just a minute, folks. 1 minute. Welcome everyone. New look on the channel. Actually going to be on screen to be able to talk to you today. So I'm excited about using this for the first time. It was we tested a lot of stuff over the weekend. I see some of you that are on the chat line that were helping me set this thing up. For some reason, the chat is not coming up like I'd hoped that it would. Don't know. It didn't make any changes to the settings that we tested. But anyway, so we won't have chat on screen. It was kind of handy for me to be able to communicate to you folks. So a lot going on. So we talked about the 3380 level for a number of I don't know, we'll say five to 7 days. We finally got through that level, that then penetrated and made a new high. And now we're a new high. I just saw a story. I was looking at my phone a second ago, and it says Jim Cramer urges investors not to be fooled by new high. So that kind of makes me concerned. Is it just because I'm starting to see, and some of the things I will discuss with you today, I'm starting to see signs that this thing is becoming somewhat vulnerable. And I've got the trading screen. You can't see the numbers, but I am short this market from 33.94.50 on the futures. High was 95.75. This thing is like watching paint dry anymore. We got so used to seeing these monster volatility days. Now that we've collapsed basically from a volatility standpoint down into these very narrow ranges, then now it's like the old school days. I like the heightened volatility. I liked all the stuff that we saw as far as the volatility. It was a lot more fun trading. And I think overall, what I'm noticing on just going across channels and even our channel, our views are down. We're still generating 10,000 plus views a day, sometimes 14,000. But when things were much more in a frenzy, everything around the internet was going crazy as far as the markets go. Now that we've normalized to a large degree, we're not seeing that type of action. Yeah, so but I'm going to be on camera. I see some comments here. I'm going to be on camera and talk to you folks, and we're going to go full screen and do a lot of things here today. But as I said before, I really don't want to be just, I hate talking monitors or talking screens. So I do want to spend some screen time with this. But the bottom line is that we're approaching an area, and I'm going to go through a lot of details, go through more details than we had last night. And I apologize, last night we didn't get the NASDAQ coverage on there. I'm so frustrated with the software that I produce the show on every night. I had a crash at, I think it was like 12:10 last night. I had a crash and I lost actually 4 markets of coverage I did. The clip that I made was gone. So all the energy I had left at 1 in the morning last night was to get the S&P and the gold. And I'm glad I covered gold because that's certainly something we'll talk about today. But the bottom line is, we're really just trying to get, it's not, it's one of those things where I'm, as far as production of the of the show, you know, it's very methodical. And when that thing went down last night, it just took all the energy out of the room, took all the oxygen, was gone. But anyway, let's go to, we're going to start digging into some of the stuff that's out there right now. And I think that the thing that I want to discuss with you today is actually just this whole configuration of the S&P. And it's very interesting. We're going to go back in time a little bit as we look at the configuration here. It's interesting to me anyway that we're seeing this contraction right at the same level that we saw the contraction in February. Now, it's possible that we're going to break out of this level, but it's going to be interesting to see exactly how this plays out. Now, PPMs are starting to fade, but I'm going to go back in time just a little bit here. And so we're going to go and look at exactly what happened going back to late 2019 and then going into where we are now. You can see something very interesting as we came into this high 3,300 level. We started to see this contraction of volatility and right into the point where it finally started to break through some of the key levels here. And the first level that I'm watching right now, and we're above it right now, is going to be the 10-day moving average on a short-term basis. And we're continuing to grind this up. We've had a high, the range again today, 10 handles. I mean, this is, you know, we're used to having 20, 30, 40. I remember one day we had 125 handle range in the S&P. I'm not actually asking for that back, but this low volatility is really, it was a lot easier to do commentary. It was a lot easier to do analysis when we had a little higher volatility. With volatility contracting like it has, it's really been interesting. But if you notice a couple things here, and I'm going to draw some things on the screen here that I want you to see. It's interesting that I'm just going to draw some patterns here on the screen that I think are starting to show up as significant patterns. And we get these upslopes and this contraction. And I'm also going to point out some things with the PPMs here. This one's a little cleaner. But if you notice, as we came, this area right here was February of 2020. And this contraction, just like what we're seeing right now, happening at the same level. I don't want to sound like everyone on the internet, but this is the analysis. We're starting to see that same contraction again, and that pattern continues to emerge at every top of every sequence. So I guess our thumbnails that we had out, one was, you know, risk are starting to appear, and then, you know, a top is nearing. And this is what I'm talking about. I didn't say there was a top. So I saw a number of the players, as far as folks out there, you know, maybe making comments. I'm saying that we're nearing the top, and this type of configuration is exactly what I'm seeing. Now let's go to real time here, and you'll see this same pattern that I was just talking about starting to emerge. There's that upslope and a contraction of volatility. PPMs are very close to rolling over. It won't take much to tip the boat over. It's already tipping. So the idea that if this thing will take very little to tip it over, and this is why I mentioned just a second ago, the key number is going to be that 10 period moving average. It's about 20 handles below where we are, but it's creeping up every day. This number is getting closer and closer to a trigger point, and that's what I want to point out here. And what I'm talking about here as well is not a major top, but we are looking at a couple things, and I'm going to bring up the WaveTech database. I'm going to tie all this together. I'm going to do it as I usually do on these live streams. At least the first half hour, I want to really dig in deep on the equity markets. We'll touch on NASDAQ and maybe even get into that leadership thing that I've been talking about. So this gives me an opportunity to really unpack a lot of different ideas and concepts. So let's so this is a key concept here that I want you to understand. And then as we start to go into the next level and we start to look at a weekly graph, things are still very positive. PPM1 is turning back up again, and it's actually cut back through its first derivative here, which is a positive, and we are at 1.11, but the support line on that, and this is why I don't believe if we get a minor correction here, it's not going to be a big one, is it's going to be a move. It's going to be a move down to, possibly down to the 10-week moving average, and this is rising. So right now it's at 32.25, and that's rising roughly. It's rising roughly about 40 handles per week. So on Monday that'll be 32.70, and then it'll be literally at 3,300 within 2 weeks. So this is moving very, very fast, and this is going to be a major support, especially with the PPM at 1.11. So if you're new to watching this channel, these PPMs that are over here, they stand for price pressure momentum. They measure the angle of attack or the level that the moving average is rising. So PPM 1, 2, and 3 are the 10-day or 10 period moving average. The 2 is the 21 period, and the 3 is the 40. Now I use all simple averages, and there's a reason why I use simple averages and not exponential or any type of weighted average, is they help me to define the patterns that were defined way back in 1984 and 85 that were part of the WaveTech concept, and understanding patterns, understanding wave counts, and a lot of other things that are that drive this entire process that you folks watch. And this is very substantial. We're not in a position for a major collapse. When I say a high is approaching, it's not a major high, but sometimes you start with a minor high and it grows into something bigger. Now this little wedge, we're seeing the same pattern here that I just talked about on the daily. And what we're seeing here is this. That same upward pattern, the same action in the market grid is starting to collapse, just like it did on all the predecessors. They do the same thing over and over. And part of my job, as I see it, is to recognize that these things are happening. Now, the volatility level on this particular pattern is much higher, but we understand why, primarily because of this V bottom that has formed. This V is driving a lot of action, and as soon as I get through with talking about this, we're going to go into the WaveTech database, just talk about how that relates to this V, how it relates to exactly what's going on with the patterns from the standpoint of the whole database configuration and what the probabilities start to build here. And I've told you folks all along, we've actually just been running this channel for about 3.5 months at the level that we've been running it. And I'm data driven, but I want to show you how the data and the concepts all connect together. So my goal here is to get you folks to have a higher level of confidence, especially the WaveTech users, so you can start to trust the models and trust what's going on here. That's one of the hardest things to do in the early stages of getting involved in any type of new concept and understanding all of the elements that are going to drive the decision process and how to build that confidence. And that's once you see this, and very seldom, this will get me in trouble with this statement, but very seldom do you find me on the wrong side of the market, because I am a trend follower. These elements that I'm showing you right now do tell me about trends. The trend on the intermediate basis is solidly up. It's not rolling over, but even though the short term is in a position to roll over, and that's what I'm trying to discuss here as far as the patterns go, as far as the configuration. And next I'm going to show you how the database is actually doing that as well. But all of these things are from the PPM. You can see I'm just drawing some lines here. They're all positive. I'll draw in what they are: 1.12, 1.35, and 0.22 on the longest term. And there's something else that's about to happen. I know that, what is it? There's a lot of things that flow around the internet, and I've been a technician for a good portion of my life, for over 40 years. And I hear these things like the Golden Cross and those things. I mean, you're digging deep. But here's something that I want to point out, which we're about to do. I'm drawing in a line. The 21-week moving average is about to cross over the 40. Now, I guess that's the Golden Cross. Some people would look at that as a positive. It is a negative. When that cross occurs, it usually will signify a minor top. And I'm always watching for that. It happens on the daily. It happens on every level chart. It could be a 5-minute graph that we're looking at right now. These setups, these configurations are consistent across the board. That's what makes them valid. And so we're very close. We're probably within 2 weeks. If you recall, I think it was a couple of weeks ago that I was talking about, we're within possibly 2 weeks of getting a top in this market. And I'm still on that theme. Pretty consistent with the analysis from that standpoint. But what we're seeing here is all of these configurations, all the stars lining up. More on a short-term basis. The intermediate is still very long, and any dips down, if we were to see, we're at 33.97. So what's the high? 99. They're just trying to grind this thing higher. 40. If you recall on the market grid for today, let me go over to daily for a second. The market grid for today is 3402, 3406 is the extremes. We're trading just right at the high so far. Today's been 99.54. We traded just over R2, and we're not really seeing any reaction at all on this thing. So it'll be interesting to see how this particular pattern plays out, but definitely something that is still happening here. Before I go to the database, I'll come back on screen for something. Something that is still happening here is, here we are today with a 10-handle range. Now, I just talked to you about the 3-day indicator. It keeps collapsing and getting narrower. Well, unless we expand this range today, if we stay in this range, then we're going to see further contraction. And that's, as I mentioned in last night's video, a number under 14 is going to be very negative and on a short-term basis. And what we're going to see is that it's going to roll over. We're going to see a move down into the 21-day moving average, the 40-day moving average potential. And those numbers are right now, if I just bring that up here on the screen, you'll see on the pop-up here that 33.13, and then the 40 is way down at 32.37, which is going to be similar to the 10-week moving average I just showed you. And the way that when you look at my analysis, and you can see what's going on, you're going to see two things, is that everything's connected. So right now we're at a daily, weekly, and monthly. So all of the moving averages, and the reason why I use the simple is that the 40-day moving average is in correlated with the 10-week moving average. And the slowest average on every chart, daily, weekly, monthly, the slowest average on the next level up. So the 40-week moving average is similar to the 10-month moving average. So everything becomes very cohesive from the standpoint of how these patterns all fit together. And once you understand that when you're doing analysis, and you have to confirm them on multiple levels. Now, we're going to show you sometime in the future, those wave techers, we start to roll out our next level, we're going to show you something called multivariate trading and how to trade on multiple levels simultaneously within a portfolio and have it all automated. And what this all came from was understanding that there's three levels of trend. There's the secular, the intermediate, and the short term. And we could break this down and go into hourly graphs and go intraday, but this isn't about day trading. It's about understanding the underlying trends and looking at the indexes from this level. Now, this same analysis can be applied to individual stocks, and that's why we have the models. There's no way that you can track 16,000 models. There's only so many markets that you or I or any human could go through, even if we had a full room of people in this giant room, and everybody taking a set of stocks, you couldn't do what the servers are doing. And that's why we built the quantitative models. Well, nearly, actually I built them, and the first models were built in 1996, and the trading models were built back in 1991, 92. And all of that research came from the mid-1980s when the WaveTech concept was actually developed. But the reason why I go through all this detail on these live streams, so I can connect the dots. Like I said, my goal is to build the confidence so when you see the analysis, you can put these things together too. You can put a 10, 21, 40 period moving average. I'm working on getting my indicators out there on the street right now. I know it feels like it's slow, but it's getting closer than you think. I did have some folks just finish building an entire market grid system for me on a real-time level on TradeStation. I'm still testing it. I'm not ready to reveal it yet, but it's very close, and that's going to be very significant, especially if you're willing to use TradeStation and utilize that platform, which I think is a good platform. I've used it for a lot of years. But let's go over to the WaveTech database, and let's take a look just for a second at what the metrics are telling us. Now, think back where I was just talking about as far as what's going on with the markets. So we're looking at the short-term starting to roll over the events that have occurred over the past 60 days. We came off the V bottom. We got a lot of traction. We got up to about 91% bullish. Right now we're at 74.89, but we got up to about 91%. We dropped all the way back from the June 9th high. We fell back to the roughly 65% bullish. So we went from 90 to 65. And then my expectation was we'd go back to 74, 78 and stall. Well, we went all the way back to 90 again. And that's because of the strength that we've seen, the underlying strength in this market. And it hasn't just been, I know folks are telling you it's been 5 stocks are driving the market and all the indexes and Apple's worth $2 trillion. No, there's 12,388 symbols that are in trending mode right now. Some of these would blow away the returns that you've seen on Apple. Okay, they're buried in this database, but they exist. There's stocks that are up 300 and 400%, but there's plenty of stocks that are participating in this rally. This is just on a short-term level, but my expectation is that you'll see last night we got 641 sell signals between the two models. There were 138 buys. There was a net selling of 503 stocks. That's still not very material. Even though the market closed at a new high yesterday, even though it's likely if we just stay like we are now and it closes higher today, this short-term database is going to continue to roll over. And the reason for that is you see this down here below. If we just look at some of these indexes here, you look at the services index. These are our proprietary sectors, by the way. So I'll just draw over here. Healthcare, 81 days of 44. It's double this normal holding. This is on index level. A bunch of these have actually doubled and extended well beyond what they normally hold. Now, some of these, like conglomerates and basic materials, is fairly new, and that got triggered with the gold and silver rallies that we saw. But these things are all starting to get long in the tooth. And where it's really obvious is when we go over to the all stats page here, we look at the actual statistics on the model. I mentioned this last night. We have 89.9% of the expected profits have been fulfilled. I have not seen this really much over about 82, 84. And this is probably a standard deviation beyond normal. And that has everything to do with the V bottom and everything I set up as I started in the beginning of this show. And this is what the metrics that are coming out of this. If you notice, the average current duration is 39. Now that's the average on 12,200 some symbols that are out there. This is a really big number. So we're coming close to the optimized daily. And I'll explain all this real quick because this has everything to do with understanding where we are in these markets right now on a short-term basis. As the average long is 39, we basically are at 88% of the duration or the expected holding period in these models have met that. We're looking at 90% of the profits that were expected have been yielded, and these are numbers that normally don't go much above 74, 78%, maybe low 80 percentile range, but that is about it. So this entire sequence here, then you can break it down by model, and you'll see primarily on, I've got a lot of arrows. Let me clean this up. I want to talk about one more thing here. This 3-2 model here, this is how they're optimized in data by 61% of the symbols on a short-term basis are going to use the 3-2 model, and they're optimized to that best level. That's the best model for 61% of the stocks. And what I want you to notice on a daily, on this column right here, the average days held is 43. Current average day is right at 43, 42.75, 98% of duration fulfilled. And then the average profit is 11. Current average profit is 12. This thing is extended. Does not mean, by the way, that it can't continue to grind. And I know I've seen comments on the channel about me talking about the creepy crawler, and the creepy crawler is just that. It just goes and goes and goes, and it will break like a snap. Just boom, it's going to break. And when that happens, then all of this stuff will all make sense. Then we'll start to see the database contract and start to sell off and all that kind of stuff. So I want to go through this market scenario because I think it's important to I see Richard. Yeah, there are a lot of symbols in here that are somewhat, there's a lot of mutual funds and ETFs in there. What we can do here, and you can break this out. So if I go over to this page, if you go, those of you, and you can actually, you can sign up a free account on portfolioexpert.com, and you can get this dashboard. So you can, so just to break that out, Richard, so you can see exactly what it is. This is just equities. So now you can see equities are 53% long. So it's not at that, the mutual funds are 67, ETFs are 55. Now this data, this screen gets updated just on a weekly basis right now. So these are the intermediate models. But when you look at these, you can see exactly what's going on. This is the buys and sells by week. And then you can come down and look at sectors, and you can see what the fulfillment is. And you can easily go here and drop down equities, and I can look at just ETFs. And it will show all of this stuff is interactive, so you'll be able to see exactly where the investment exposure is by week, and you can go anywhere. You can just do a mouse over on any of this stuff. But down below here, there's also a breakdown of individual industry groups, and you can see all the buy and selling here, like global real estate right now is down to about 25%. There was a 10% hit. This was on Monday's orders. So you can break this down. So if you want to see the lack of, let's say redundancy in the database, this is where it breaks down at. So we're literally looking at this, but here's the point. And mutual funds and ETFs, guess what they have in them? They have stocks, and they have all the same stocks. So they actually end up being a proxy for the database as well. And yeah, so maybe I guess that's something that I want to be aware of here. As somebody mentioned that we've got the Fed minutes coming out, and maybe they're already out here. We're seeing a little bit of a bid come in. We're trading 98.16, but if I go back over to over here, we really have got a little bit of a blip here. And typically, this is actually good to talk about. Typically here, you can fade this little blip. That's something I've talked about before as far as intraday trading. You can usually, if you get an uptick after any kind of report like that, you can fade it, and it's they haven't scared me. It looks like they're just trying to bid this thing, but this initial response, maybe we're going to print up, and on the cash we'll see that 1402 number, something like that is a possibility. But I would lean on this thing. If you're a day trader, I would definitely take a risk of $3 or $4 here to take the other side of this trade. I don't think whatever came out of that report is going to be real material. Anyway, so let's go back and go back to the S&P chart. So I spent a lot of time, about a half hour, on just talking about the markets. We didn't touch on the NASDAQ, so I wanted to check on the NASDAQ here for a minute, and we'll look at the market grid for today. And we got to 11,438, R2 11,484. I talked about last night, if we can get through R1, we'd see an S1, R2. The low has been 332. S2 is 11,334. So we did see that number reached, and now we're looking at S2, R2. We'll see if we can get through these levels at all. They're already starting to fade this S&P. Let me pop over there again. This is a classic. Look at this thing. You always fade that response to a news like that. Look at this thing. They're just creaming it, and that's an old trade floor trick. Yeah, I just want that is like the oldest trade in the books. You get a reaction here, you sell that reaction, and then you for a quick scalp, you're already if you're scalping, you've already sold and you're buying these back. You're just bringing them back in immediately. This is a classic trade off of any type of report, especially a highly anticipated report. You'll get a spike up, spike down, you can fade it. You fade that response. And just from, one day I'll just do we'll hang out with day traders only, and we'll talk about different types of techniques and things like this that that you can do to benefit from this. But yeah, this was classic. They couldn't make a new high. They're still selling them a little bit. There's decent pressure come in here. One of the other things, if you can see on the far right hand side, I'm just trying not to show the P&L. What you're looking at here is you're seeing we were printing 200 by 200 as far as the bid ask goes. Now all of a sudden it's down to 80. Look, they're hammering this thing. And what will happen when you see these sell-offs, you're going to get the number of trades on each side will just shrink. They'll go in half, maybe to a third, and the machines are running this now. I guarantee you. Now, look, we are right now 5 handles from the low of the session. So if we're going to expand this thing, we're going to expand it on the downside here. And of course, I would love to see it break this thing down right here. But this is classic action. I'm glad we got a chance. I love being live when these things come out. Wednesday's a good day. Look, they're still selling this thing. They just printed down. Now these are the same market grid we just printed down. Now this is a 1 minute graph that we're looking at, and this is the market grid for this. And one day I keep threatening, like I said, we're going to do, I just decided it, right? We're going to do a session on just day trading, looking at configurations, how to set up some intraday trades, how to look at some things that are going to be important. A lot of it has to do with the market grid and these numbers. You folks know from watching the channel that grid, that daily grid, weekly, monthly, all of those numbers, just like I talked to you about in the early phase of this presentation, is that all of the numbers on the charts, the daily, weekly, monthly, are all interlocked, all related into a pattern. And that's why I put the matrix out of daily, weekly, and monthly, and working on some ideas and how to connect all the dots there. Now, you probably saw a blowout of the lows here. I'm just looking at configuration, and like I said, we'll spend a whole session on that. So I'll tease you, and I will absolutely show you folks how to do this stuff. And like I said, once again, I'm stuck on TradeStation. I've been doing TradeStation since 1992. In fact, there's user studies in TradeStation that I built back in the 90s. They're still part of the platform. And so I worked with the original founders of the platform. So here we are, we're bouncing back. But that was a nice fade trade that you can get, and you got to be quick and nimble. But there was a nice trade there. But we'll see how this thing plays out. But enough of that. So I promise you, we will do a session one day, and that's all we'll do is just talk short term. But I'm going to rely on you folks to give me the feedback to be able to, push me in that direction. Show me some enthusiasm, right? And if you're watching the show today and you like what this content's doing, make sure you hit that like button. That helps the channel and supports the channel. And that's one of the things that we have to. I'm trying to bring a lot of information out to the public, and it's been a lot of fun from the standpoint of interacting with everybody. Okay, back to it. Yeah, they still want to fade this thing. They're not done with it. Looks like there maybe is another round. So I'm going to get on another screen. This will take over me. They're about to press the lows. I suspect we'll make a new low on the day. We'll keep an eye on it as we go through the show. We're going to be hanging out for a while yet. We'll flash back. Okay, let's go through. Let's do a couple things here, and then I believe that will be probably the best course of action to take, and then we'll work our way toward digging into the stuff that you folks want me to cover today. Hey, Wacky Warrior, thanks for the super chat. Appreciate it, man. You know, I tell everybody all the time, you probably should, if you really like the channel, you should subscribe to the Wave Tech, and you know that really supports the channel and some other efforts that we're doing. So make sure, you know, take a look at it at least, that you can do that stuff, because that's an important place. In fact, I'll show you real quick. This is where you want to go. You go here, you sign up, you support the channel. This is the stuff. We're going to do some really cool stuff together. I would love to go live every day. I wish I had time to do that, but unfortunately I don't. But anyway, this stuff here, this is where you want to go. There's a video there, explains what you're getting. Right now it's like under 40 bucks for the rest of the month, and then it's 97 bucks a month after that. And it's worth a shot. We do weekly training, all that stuff. You guys know this stuff, but I appreciate everybody watching. We've got a fair amount of people watching right now. All right. Yeah, so what I want to do next is we're going to go through the commodities, right? We're going to take a look at gold and silver. We'll do crude oil. And then I think we'll be about that time. That's going to push us toward 1 hour into the show. And then the rest of the show is going to be all about you guys, what you guys want to talk. And then, of course, I'll put my 2 cents in here and there, maybe go on a few tangents as usual. But yeah, let's see here. Yeah, Dow is actually really rolling. Yeah, we'll take a look at that too. Thanks for pointing that out. Yeah, and we do need to look at copper. You bet. So let's do commodities. I think that there's something there that we need to talk about. And you know, I covered lumber a couple of days ago, or yeah, night before last in the video. And if you folks, I'm not sure what's out there. We kind of cleaned the channel up. I used to do a weekly show and didn't get a lot of views. It was, for the most part, it was behind a firewall and just for our institutional clients. But I was talking about in January that we're going to see this big boom. So copper, lumber, all those things. Most of the stuff that's out there in the building materials now, there's not as much copper that used to be in building. It certainly goes through a lot of other things, but that is actually absolutely an area. Let's take a look at it. So let's just start with the easy one, and let's start with gold. And I talked about this last night, man. This market is broken. Okay, it's not. We're now trading below the 21-day moving average. We've traded through the extreme 1969. The low has been 1960. I talked about hitting those numbers, 79, 69 last night in the coverage I did on the channel. And, you know, so don't be surprised here if the lows that we printed over here, that we're heading all the way back to the 40-day moving average again, 1880. They're going to have to punish a bunch of people that got way too bullish up here. You know, the whole concept of, you know, the market goes in the direction that is likely to hurt the most people. Well, that direction is down in gold right now. And you see the PPMs are accelerating. We're minus 0.37 on the PPM 1. PPM 2 is still positive, but we are breaching the 21-day moving average right now. This is an issue, and you see all of the PPMs are rolling over. This thing's going into short-term downtrend, probably going to retest the lows, and we'll look at some other levels. There may be bigger numbers on the downside than you think right now. And certainly silver has and we're going to go through silver next, but silver has a much different configuration. And it's actually more bullish. It's sort of like looking at the S&P versus the NASDAQ. The NASDAQ has more upside, more momentum because it's been the leader. And silver has a similar, but probably 3 times the volatility range as well. Yeah, I have to, Two Bridges, I agree, man. Listen, I love trolling Warren Buffett. He's the easiest guy to trade against ever. Been doing it for years. You can fade that guy all the time, especially he likes to, I don't want to go on a Buffett rant. I'll save it. I'll save that. But he likes to put what he's doing out there, hoping to influence you and me to follow him. We used to have characters like that on the floor. I call them promoters. Hey, I'm buying this. You guys should be buying all that stuff. You see it on this timeline right now. I used to hang out on trading floors. All the stuff that's on these timelines, that same stuff that used to go on the trading floor. Everybody's talking stuff, right? That's what makes the market. I love it. Okay, so like I told you guys before a lot, and I just want you to look at me sincerely. I don't care if you disagree with me. I love that. That's what makes a debate. Just don't call me names, okay? Don't call me names. Don't do that. I love all the interaction we get on this channel. So let's bring it on, man. I've been with, I hung out in trading floors with hundreds of people, and everybody's got an opinion. Trust me. So but that's what it's all about. But Buffett is that. So I went too far on this. I didn't want to go that far, but I do want you to understand that this is all really good, healthy stuff. And when we get done with this metal stuff, then we may just go to the miners. I'm looking for one specific guy to show up, and I will. I'm still trying to convince him to come on the show anonymously. The guy is wicked good with the miners, and I mean really good, especially the micros. He knows that like few people I know. Anyway, hopefully I'll convince him. So, okay, back to it. So gold is, as we go to the weekly chart, what we're going to see here is this. This bar that we set up going back on the week of the 14th, we had a range of 2060 to 1874. We're still, this week is an inside trading week. And if we look at the weekly numbers here, I mentioned last night I didn't think we'd get there. We may get there now because they're just hammering this thing as we watch it. It's down 52 right now. It's trading. It is just punched out a new low. Okay. Not to mention, check out the S&P now, all the way at 84, printing new lows. Awesome trade if you faded that thing, I'm telling you. So what we're looking at here is the potential. I said, I don't think we can get to S1 last night. Maybe we can. That's 1919. This thing is absolutely coming apart. The dollar has got a huge bid in it. I've been talking about the dollar. And one of the disappointments last night, I did amazing coverage for the dollar. And that's one of the files that got lost. It's so frustrating because I was talking about how the Dow, yeah, that's really frustrating. Yeah, awesome. Yeah, I'm glad you faded that puppy. That's awesome, man. Like I said, I wish I could do one of these trading room things. It would be fun. I just don't see it in my future right now. That's why we have software, and we're going to get these things out to you so that you can use them, and I can interact with you folks. Software is much better than an individual, much more disciplined, much more everything. So the point of what we're looking at here is an inside bar. So far, let's see here. What did we print? We printed 57 low on gold. That 1919 is going to be, that's S1. And we might be able to print S2. What can we do it this week? I kind of doubt that, but I do think we could see 19 now. Maybe I'm getting influenced by the weakness we're seeing today. But if we stay down and if we close down, let's say below the 86 number, that's going to be all it takes. Let me go back to the daily for a second here. Yeah, we close under probably 79 now, the S3 number. And if we close under STX, that's going to be really negative. Now, it's interesting because you folks have heard me talk about the scenario of when you close above the grid, then you get a 2 to 3 day sideways move with a possible move to the downside. What we're looking at is the when it closes below on the STX, if it closes below that, it doesn't signal a rally for whatever reason. I've never seen that characteristic. But so all this is doing is confirming the weakness if we stay below 69. We'll see how this stuff, this is intraday emotions that we're seeing right now. And, the S&P is trying to bounce back a little bit, but, it looks pretty interesting. I'm going to bounce over just because I want to take a look at it. We got some folks. Let me bring that up. Yeah, so we got a little bounce here on the S&P off of that high, and yeah, I want to get this. So we go back just a little bit. Yeah, you can see here, right over here is where that fade trade was. So we traded down to 76 on the futures, so we've already bounced 7 or 8 handles. So I'm sorry to bounce them around, but this was something since we ended up doing some work there. We should retest here. We should come back into these webs here, possibly move down toward the back to the 81 level. So. But I'd look to maybe cover that trade, at least part of it, if you want to hold it overnight. I think there's an overnight trade off of these numbers here, especially if we end up closing lower today after printing the second high. I think it'll be pretty good. So so if you're a day trader, you can take profits down here around that 81 level. And if you have multiple contracts, then you might want to take those profits and use it as a cushion against a longer term. Maybe for a multi-day trade. I think there's a good short up here. I really do. All right, so back to it. So gold we covered, the weekly we covered. Let's go to silver. I'm going to have to speed this analysis up a little bit just so we can get through stuff. Silver is doing something interesting. It's the 10 period moving average, 27.54. We're trading 27.09, so we're down 4.5%, and we're moving toward the bottom of the grid here. And the bottom of the grid is at 26.47. Low so far 27.04. So we're getting close. What we got here? S3 2688. Maybe that's where we're heading. Maybe we're going to punch through this 27 number here and move down into the grid. But we're also seeing look at the PPM1, the PPM1 here, PPM2. This thing is rolling over. So, you know, that's why when we're done with this, we're going to do copper and crude. And then I want to go to the miners. So don't put them on the timeline yet, because I'll let you guys know. So store up your ideas for the miners, and we'll hit some miners, and then we'll go through all the Teslas and the Apples and all the other stuff. But I want to stay on this theme of what we're going, and I may just bring up a couple things of maybe even touch on some other commodities here as we go through it. So silver, we've got that. We go to weekly. This is the only place you're going to be able to figure these metals out is on this weekly chart. These are the big numbers. And just like in gold, last week we had a huge range. We know that, but we're trading on an inside bar. And I expect we're going to have an inside bar. If we look at S1, 2664, maybe we can print that down. We just stuck out 27, by the way. It printed for a second. We printed 2696. And what we're looking at here is that the S1 on a weekly basis is 2535. And we have to look at last week's low, which was 2375. So a move to 2530, 2503 is going to be very, very possible here. Another $2 on the downside. I also mentioned, if you look at the high, it was 2877. We went just above R1, 2748. I did discuss this, I believe, on Monday's video, that we could go 27, that we could trade up to the R1 number. So we did that. And now we're probably looking at least an S1. And there's a possibility of S2, but I don't think it's that high. I think we're going to get an R1, S1 range on a weekly basis on silver. So this is the copper chart, and I haven't covered copper ever on this channel before. We haven't even come up with yet. So you can see one thing that's happening here on copper. This is a weekly chart. We're actually above the RXT number, the extreme. $3, and we're trading 301 and change, and this thing is pretty much printed an extreme, but it's similar. We're just got above the 200-week moving average, and this is a nearest futures contract that I have up here. Let's go to a daily real quick to see if there's anything there. Yeah, so this pattern is very bullish, 0.27 on PPM1. The rest are flat, so all of the action and all the getting above that 200-week moving average is probably the significant thing. I don't really see a lot there as far as going back to trying to figure out what kind of targets. Let's see if there's any Fibonacci targets out here that we can locate. These dots that you see on the screen, by the way, those are cycle events. There's no cycles that have come in recently. These are what we call Fibonacci cluster cycles. I'm not really seeing a lot come in there. Let's go ahead and yep, no Fibonacci projections at all. I'll leave that as we go forward. Let's go over and let's hit on crude oil. Yeah, here's cash trading 83 on the S&P. Futures just traded 79, down 8 handles now. They're really starting to move this puppy. Yeah, we may have just watched the top together, folks, for the short term here. We may have seen it print. We'll see how this thing sets up. But I went through, this is a weekly chart on crude oil. Yeah, we are going to go through WFC and JPM. We're just an hour into the show right now. I usually do two hours and a half, maybe. So just remind me as we get later to put the Buffett troll trade out there on the financials. I don't think we're there yet, but anyway, yes, yeah. So I agree, Chris. I think S&P does want S3 today. I want an EXT. I want it all. Anyway, but yeah. So this crude oil, I've talked a lot about this. PPMs are off the map positive. We still have the PPM 3 at a minus 1.42, which is going to be resistance. Currently 53.73, and that number's dropping 1.5% per week. So it's going to be around 40, somewhere around $48 to $52. This market is likely to cap out there. But the trend on a weekly basis is very solid. And this goes to what I've been talking about for a while, is that the economy is still recovering. And I guess the one thing that bothers me when I hear the administration talking about how many jobs they created. No, didn't create shit, okay? These are jobs reclaimed from after the shutdown. They're not being created. There's no jobs being created right now. I shouldn't say that. That's wrong. There's jobs being created, but that's not what we're seeing in the employment numbers at all, period. That's not what we're seeing. What we're seeing is jobs being reclaimed, people coming off furloughs, businesses opening, the economy continue to start to restructure itself. That's what we're seeing. So, and those are good things, by the way. Jobs are jobs. Don't get me. I just hate that all of a sudden there's like they're creating jobs again. No. They're not. They're not creating jobs. Okay, so yeah, I'm biting my lip right now. Okay, so yeah, crude oil's there on a short-term basis. I don't even think there's anything worth taking a look at. It's so narrow, but we're moving. The one thing we can look at is the 200-day moving average, and we're moving toward that. It is also declining. The absolute most we're going to see on this thing is, if it did get a big burst up, it would be that 48 to 52 is going to be the cap on this market right now. But they're absolutely illustrates how the economy is coming back. Yeah, Mr. Wright, what major mall filed bankruptcy? That's an interesting story, and that's one of the stories I've been trying to get out there, is actually what's going on. Commercial real estate is a nightmare right now, and primarily buildings, and yeah, these office building situation is terrible. I think it was REI, something like that. Was it? I think it was REI actually built a brand new campus, and they're not going to move into it. They're just going to sell it because everybody's working from home. So we're seeing what I believe is to be a complete restructuring of society, how properties are going to be used, all of those things. And it's going to be interesting. there is going to be a reconfiguration of just about repurposing is a better way. Repurposing of a lot of properties and how they're going to be used and what they're going to do with them. It's, yeah. In the retail world, so upside down, it's crazy. And I didn't see the, been busy all morning, so I didn't see the Target results, but I suspect they're probably doing pretty well as far as that goes. You know, like what we saw in Walmart yesterday. But anyway, yeah. Yeah. So let's see here. Did I cover everything? I think I covered everything. One last market here. I'll just stay on screen for a second. So I'm bringing up lumber. I covered this the other night. Lumber's up another 3.6%, 781. This is a daily. Let's get to something that will make sense. Let's go to the weekly graph here. And you see this thing just parabolic, right? So it's not going to stay parabolic, but we're printing up at the upper end of the RXT is 800. The high so far has been, let me make sure I get it, 783, which is today's prices. So we're not seeing this thing just a runaway. I mean, this almost looks like a Tesla chart, right? This is just pretty amazing from that standpoint. PPMs, look at the 3 PPMs. These are huge. So what typically will happen, and like I said, when I covered lumber the other night, it wasn't just to cover, I'm not suggesting trading lumber. I mean, if it's a little late maybe to do that. But what lumber's telling us is what's really happening. And I think from a geographical viewpoint, you're seeing a lot of folks all of a sudden are obviously, for obvious reasons, are turned off about being in the cities and the urban areas and all that stuff. And people want to go to all of a sudden that sprawl that, you know, is starting to happen again. And they're just building everywhere. Everything is going absolutely crazy in the building area. And we saw that with housing starts up 22%. We see this across the board. And all the lumber chart is telling us, what lumber is telling us is that it is a reflection of what's going on in housing right now, in building. And this is all single family. And this is why I want to really, I'm going to push it because my brother knows the commercial market really well. I'm going to try to get him to do something here. And I've been beating on him. He's been really busy, but trying to really talk about the retail complexes, some of the cap rates, what's going on with the whole commercial real estate thing is a very, very big deal what's going on right now. And it's just, yeah, it's big and it needs to be talked about, but it is material from the standpoint of economic activity, but it's not material at the moment. It will surface at some point, and maybe there'll be one of those things that we wake up to, and having done this for so many years, you wake up one day and go, wait a minute, when did that happen? And what you find out, well, it was always happening, you just weren't paying attention, right? You know, it's just sort of like when people tell guys that start these successful businesses, wow, you're an overnight success. I think Sam Walton had a great quote. He goes, yeah, it only took me 35 years to do it. And so that's the same thing here with these type of events. This commercial real estate thing is brewing in the background. You have to understand something. There's some major, that's one of the biggest commodity markets there is real estate. And there's some super smart people in there. I used to work for Prudential back in the 80s, and I met some guys that were working in the real estate division. These guys, I forget the number, it was old school days, this was back in the 80s, but they had billions of dollars they had to invest because there was an insurance company, had all this cash flow, and they had to find places to put money. And their visions of how the markets were going to look. There's an area in California I used to live in, and I remember those guys telling me that this was going to be, and we were in a meeting, there was about 20 of us in this meeting, it was a small meeting. This this one area was going to be a concentration. The value was there and they were going to build it out. And I thought, there's no way they're going to do that. Well, guess what? They did it. And of course, Prue is a leader on that investment. And then once they built a couple buildings, everything just blew up around it. And, it was down around Livermore, California. That thing just blew up. Okay. And anyway, the whole point of this is the same thing happens here is when there will be some repurposing of these properties. There's a lot of real estate. I saw a video I ran across on YouTube a couple of weeks ago. I'm just going to continue down this commercial real estate, but there is, I think, 2, maybe 3 entire cities in China, speaking of China and commercial, they have built complete cities, all the infrastructure, all the buildings to house 1 million. I think one of them was almost 2 million people that they could just move in tomorrow. They take all these people, just move them in. The city, the structure, the roads, the lights, the everything. It's phenomenal. And so maybe the concept there was the old concept of .com, right? Build it and they will come. Well, maybe they can move the people around so they have a little more control there. But this commercial real estate situation is a very big deal, and there's some really smart money, and there's some very large money. They will figure this out. I don't know what the answer is yet, and I doubt that I don't know that it's going to be a complete collapse, and that's how they figure it out. But there is going to be some things there that I believe will be really, really important to pay attention to. But everything we're seeing here, this lumber chart, sorry about the segue, but this lumber chart is about the movement, the restructuring of America. And this is something, if it catches hold, if this theme continues, this is a multi-year theme in residential housing and infrastructure out in the burbs. And, it ends up, they're just moving. We're doing the opposite of China, or that's the perception. We're going to take the cities and move them into suburbia, not the country moving into the city like they've done in China. And I can tell you, I was in China 20 years ago. It's been a month there. And even back then, it was amazing what was going on. I can't imagine what it'd be like going to Shanghai today and see what's going on there in comparison to that 20 years ago trip. But the point of going on this little rant here is it's about real estate. It's about the repurposing, restructuring of America, which is likely to happen. And I remember saying something back in March that we were going to come out of this thing way different than we went in it. And that's exactly what we're starting to see. We know people working from home. We've just restructured everything and how people are working. And it maybe makes sense. Like I said, there's going to be really good things that come out of this, and there's going to be bad things that come out of this from the standpoint of the economic viewpoint. Done for that rant for right now. Okay. Yeah, before we move on here, let's flash over to the so we printed 76. We're starting to see some stability down here in this market, and that may have been the worst of the day. Somebody mentioned earlier, going back to this chart, going back to the cash. Yeah, our 81, what's the low? 81. low 81. We printed, wow, almost exactly S2 here, folks. So 33.81.42. Yeah, 33.81.42. The low 33.81.57. So we did see an S2 print. S3 is 77. We'll see how this thing plays out. If I go over here and we'll bring up just a segue for the S&P here for a minute. Let me do a couple things here. This is an hourly graph of S&P, and we punched through the grid there. The last hour grid was 33.92, and we printed 81. So, but you can see the PPMs are rolling over pretty hard on the hourly. So yeah, we're watching potentially. This thing doesn't. I know we're only down $2.65, but this is not the kind of action you want to see if you're in a breakout. And this is why I continue to talk to you folks about that. This market's not in this big breakout pattern. Yeah, so I just saw a comment off my rant there that suburbs are the way to invest now. Probably so. I think this is an early cycle event. I mean, it's sometimes it's hard to be one of those early adapters or early players, but it's definitely what's going on. Community where I'm at is just exploding. The issue that we have up here in the mountains is called this funny commodity called water. And so there's some limitations. Everything's in an aquifer. There's not even a river. I'm in Arizona. So everything's underground and in the aquifers, and there's a limitation on what type of population the place can support. Yeah, so all right. Just want to do that little segue with the S&P there. One quick glance here. Yeah, so that we're definitely starting to set up a low here, but maybe we'll see S3 77, 81's taken out. We're not much of a bounce here, but there's a little bit there. Okay. Okay, let's do this because yeah, you know, there's so much we can do here, and I actually meant to give Jay a task before we did the show today, and he might be able to multitask. I know he's hearing me. I was wondering if there's a portfolio that you built. I think we have one like on the home building, like this old house or something like that. You can put something on the timeline. But yeah, a couple things. But the REITs are something we should do a review, and I don't want to do it on the fly. I'm just making some notes for myself here that I think we should definitely dig into this commercial real estate, start to look and see what kind of stressors there are in some of the REITs, and see if we can identify some of that, because I think that's an area that we should go on. And if somebody asks, should we short the S&P? I think we're really close to answering that question. I think you probably could go short and have stops over 06, 34.06 could be a decent trade if you can get a little pushback. There was a really nice rally just a little bit ago. We're only down 0.91 right now, so it's trying to come back. And they're probably gonna print this thing up positive 92 again, something like that. It seems to be a lot of action here, but there's definitely the type of actions when you see markets print these highs and there's sellers there. This is what I was mentioning in last night's video, that there are a lot of folks nervous about this thing, and it won't take, the boat's already tipped. It won't take much to tip it over, but the limitations are what I talked about early in the show. So if you just joined, what you want to do is when this replay comes up, watch the first hour, because I went through a lot of details on the S&P and what's likely to happen here. But somewhere between the 33.20 and 33.05 level is going to be the downside, and it will be limited if we do roll over. It's not going to be a big rollover from here. Now, that doesn't mean that that is the beginning of something larger, but it certainly, at least at the moment, is limited. Okay. Okay. I'm just looking at stuff. Okay. So can you folks throw maybe 2 or 3 mining stocks at me? I guess we could do the Buffett trade, which is gold, which is AU, the Barrick Gold, right? I've got an intraday chart here. Let me flip this over. Let me go to weekly. So just looking at Barrick Gold here. Okay, hang on. I'm just writing down some of these symbols that come in on the line here. All right. All right. So I got a few. I got enough here. Yeah. So, but looking at Barrick Gold, we're getting a little bit of a reversal off of the extreme. This is weekly. We do have some positive numbers. Also, we have Fibonacci projections for a min 37.98. That's another 10 handles. You know, I doubt if what's the volume on this thing? Yeah, it's pretty big. Yeah, we got look at the volume on this stock, 24 million. A big number. But we're also starting to see that reversal as we see gold now down, by the way, down $70. We covered gold a little bit ago. It was down 60. We're now printing 43 on the gold. I'm just going to flash over to the gold futures for a second. I just want to see the low 39. So we're getting a lot closer to that 19 number I was talking about. So we're definitely printing down, heading for that 19 number. Down 70, silver down 5% now. So these things are still rolling over. So I think maybe the trade was when we heard that Buffett was buying Barrick, was the trade was to sell gold, I guess. Yeah, so look at ES all of a sudden we've rallied back. We went positive on the futures. We're now trading 85 on the futures. I'm just bouncing around because there's a lot going on here in the market real quick here. But yeah, we did see a bounce back here, but it looks like it's about this. It looks like it's close to a point where it's probably going to stall here for right now. But they're definitely gonna work this thing. We were down. What did I say? The low was 76, so we're 10 handles off the lows here. Jonathan Klein, I love that. So Jonathan said on the timeline that, hey, my theory is that I think Elon's asteroid mining nickel and gold and in space with NASA, and that's what all the batteries need. That's pretty funny. Yeah, so I did see a story the other day that Tesla is likely to become a major battery producer as well, not just cars. That's very interesting. Very interesting. All right, let's do some more. Let's go through, I think HL is Hecla. These numbers and all of these mining stocks, I just want to go through a few just to kind of confirm what we're talking about here on the metals, is that what we're seeing is these things have gotten to these extremes here. This is a weekly chart, and we're just going to set up this giant flag pattern up here. Most likely there is some higher prices here as well in the metals. Once we get through this multiple weeks, we're ultimately going to see a resumption of the uptrend, and then we'll find out whether we can print new highs and do all that stuff. So I'm just going to hit on a couple of these that I wrote down. Yamaha Gold, $8 on the upside is a Fibonacci projection, 808. And as far as the PPMs go, very positive. Support at 579. Looks like you can buy down at these levels here, or close to it. What was the low today? 599. So 79 would be the ultimate. You should hold there. You got PPM 1 at 2.03, less than a 10% probability for it to go through 579. And that number is rising. That's weekly. So next week, that number will be roughly about 30 cents higher. So you'll be right at $6. So you'll look back in hindsight and wish maybe that this is the point from a mining stock. You're going to at least have support. Doesn't mean that you can buy it here and it's going to run right back up. Let's look at the daily models here real quick. Yeah, daily is very similar. We're sitting right on that 40-day moving average. If you recall, if you've been watching for a little bit, I talked about the longest. We're looking at a daily chart. So the longest moving average of the 10, 21, 40, those are the averages that I use. The 40-day is 590. We just looked at the 10-week. The 40-day and 10-week are similar, and the 40-week and the 10-month will be similar in values for the most part, and they all correlate and they're all blended together. All right, so yeah, so this suggests that there is some vulnerability to the downside, but we have a 0.34 on PPM 1. I'm sorry, on PPM 3, which is the 40. So there's on a short-term basis, there's literally only a 30% probability for it to trade through 590. So this is going to represent probably a place of support. It doesn't necessarily mean that this is the place to buy it, especially if we see more downside in the metals here. And we are seeing a bit of a bounce back here in gold while we're talking about all this stuff. Okay, one more here, and then we'll go on to more fun stuff. Mag Silver, this is daily 40-day moving average 1561. We're trading 1613. That's going to be substantial support down there. We've traded through the 21. We should bounce back above that. Yeah, so probably what you're going to see is consolidation in these stocks. So and like I said, the fact is that it's on support doesn't mean it's just going to, you can buy it here and it's going to rally back. There's probably a couple good trades in some of these stocks here, but for the most part, a lot of this uptrend is played out, and there's going to be a lot of consolidation before we're going to be able to go on. Okay. I just put on BTG, B2 Gold Corp. You see it's breaking through its extreme. It does have upward targets, but I think those are going to be negated here pretty quick. So 8.81. I think all this stuff is off. We're looking at a 40-day moving average, 6.34. We're trading 6.23, so we're trading below that. PPM 132, probably bounce back above it. But like I said, we look at gold, we look at silver, these markets have been broken, and they're going to have a lot of work to do. There's a lot of intermediate and longer term momentum that has to be bled off before these markets are going to be in a place to do anything. So there's going to have to be another place to play. So the fun, the big upside, all of that stuff has been played out. And just because you missed it, don't let the FOMO overcome you from that standpoint. All right. Let's move on. Yeah, I know I talked about this on the channel. I'm bringing up BA, so I'm bringing up Boeing. And, I mentioned I don't even know what because I lost that file last night, I know I talked about the airlines and some of the stuff here, but I think that the scenario that's going to happen with the airlines is this thing's going to continue to crawl along. There's a lot of things going on in the airline industry. There's all sorts of things that are going to be important from the standpoint of reconfiguration of the system. I saw something, I forget who it was now. I think it was American or somebody, but there's like 70,000 people that they're trying to get to retire early, take some kind of severance pay, and just go down the road. So I'm not sure what's going on, but probably if there's anything to look at here at all, will be on the weekly charts here on Boeing. It's really just, it still has some negative downside momentum. PPM 1's at 1.06. So the best that we could look at here is that it would move up, which would be a good trade, move up toward the 40-week moving average 226, but that thing is dropping about $6 a week. So in about 4 weeks from now, you're going to be, in the 190, 185 range. So it seems to be limited, but longer term, it's still setting up for a move back to that 200-week moving average. But it's going to take a lot of patience here on this one. Yeah, I think consolidation is about all you can expect here. Maybe, yeah. The grid says the 187 is the top end of the grid right now. This is weekly. Yeah, 180, I'm sorry. 187 is R2. The high is 78, 82 is R1. So we haven't been able to print R1. below S1, S2 168.30, so we could see S1, maybe R1. This is a weekly. I don't even know if we can get to an R1 number. It may be just drifting toward the lower end of this range. Yeah, just bringing up WaveTech for a second here. Yeah, Boeing's got a sell signal on a daily 3-2 for today, and so we had this this buy down here at 130. I'll flip it over to a 1.2 trade here in a minute, but made 30% on this trade. It exited on the open today. That was the exit. So I just want to bring up that signal. If we flip over to daily 1.2 here, you're going to see the trade there. We got in at, I'll have to go over somewhere else. Hang on a second here. Yeah, so we go over to the trade profile here. Actually, we'll go here just so we can see these last couple of trades. See, there was a trade on 625 to 169, and if you recall, if you're watching the channel, that was the first Buffett troll that I did, which was to sell that on the rally beforehand. That was exactly what we went to. Let's go back to TradeStation and take a look at some of these other stocks. Let's go ahead and just hit on Apple. This is a weekly Apple. Market grid is high 468.65, R1 468.01. So we printed R1. The low this week has been 455, and S1 was 451. So S1, R1 on a weekly so far. You know, it looks to me that what we're likely to do on Apple is start to see a big consolidation range set up here. We still have off the map as far as the signals go. As far as the PPMs go, 3.27, 3.08, 1.59. So very strong underlying trends. And it's going to take about 3 to 4 more weeks for the moving averages to catch up. Right now, the fast moving average is at 400, and it is moving roughly current rate about 27. So it's going to be about 3 weeks for the price, for the moving averages to catch up with the price action. So we're likely to see some of that stuff going on. Yeah, I say comment on the timeline. Apple will consolidate and explode higher. Yeah, that's optimistic view. I can't read that right now. What I would tell you, if you're long, you shouldn't be getting out. Okay, I don't know about that next phase. That at some phase in these markets where we're going to get to an extreme, and yeah, if we blast over here to the monthly, it's parabolic. So the consolidation actually could end up to be multiple months once we print whatever high it is. And remember, folks, we've got an election coming up, right? So at some stage, we're going to be getting into pre-election markets as well, and that'll be interesting to see what kind of prints we get around the markets on all of this stuff as we come into another layer of uncertainty. Yeah, it's going to be all of this stuff is going to get very interesting, but we're definitely seeing pricing in the market, especially if we went through all the fangs and let's Facebook is probably one is we'll just go through hit on some of these things, but Facebook is printed up. I continue to print up toward the upper end of the grid right now. 278.89 is the high. This is weekly. Oh wait, this is monthly. Let me go over to weekly. Yeah, the weekly chart. That's why I was surprised when I was looking at that chart. The weekly chart suggests that we're going to just trade in a sideways range. PPMs are like all of these. All of them are very strong, but we need to bleed off a lot of this extreme momentum, or otherwise we're not going to do that. And yeah, that's the thing that could set up here. See, I've thrown some terms out. When we do our day trading thing, we'll be talking about the dragon configuration a lot, because that's where it plays out everywhere. But this is the Facebook is really at the beginning phases of a consolidation. And I think these stocks are going to stall here. When I did, I think it was 2 weeks, maybe 3 weeks ago, that I talked about the. Okay, yeah, thanks, Jay. I will check that out. Anyway, all of these stocks. I mean, we're going to need to consolidate these gains that we've seen, and certainly in these stocks. So Netflix is probably the weakest of all of them. You can see we got that big spike. This chart reminds me a lot of the patterns that we've seen in as far as the gold and silver, get the big spike reversal. And now it's going into this wedge. So we're getting close on Netflix to possibly try to turn up again. But you can see how the grid has, it's an inverse where we had a spike and now we see the grid just tightening up here. And so far this week, we've seen Netflix print 495 high, 479 low, 476 was S1, and R2 is 95.24. The high so far 95.30. So spot on S2. So there was certainly a great trade against S2 weekly. And some folks have been asking. I'm trying to figure out the project that I worked on last weekend with the market grid could potentially get literally hundreds of stock ideas and things, and getting a grid built out so that I can have something to be really distributable, so you can see a lot of these stocks. Take a look at Alphabet. It's trading up toward the higher end of its range, and we're starting to see acceleration again on PPM1, but as in all of the fangs, these are still very strong stocks. And we are, I'm just looking over at the screen. We are seeing the NASDAQ start to get some pressure on it as well. So we're starting to see some selling come in there. It'll be interesting to see how all this stuff ends up today. But Google looks pretty strong, but we're printing 1568 high. The 1572 is RX2, so we're really close to that. The low 1505, we didn't print an S1, so it's kind of a nowhere's land, but printing to the upside. And primarily, you're going to get these things stacking. These bars are going to stack on top of each other. And I've talked a lot about this in the past, and I'll bring it up. is that one of the things, it's always there's an advantage of being a bar counter. And what we're in right now is a correction on all of these stocks. They're definitely in a corrective phase. So that is definitely it. Let's see here. Got to bring up Amazon. Almost looks like Google. Still pressing the high end of the range. We're looking at this weekly grid. High 33.20. R2 32.38. So we're approaching R2. The low was 31.54. We didn't even get close to an S1. So this thing is just biased to the upside. Basically had no negative numbers for the week at all this week. We closed at 48, and the low this week has been 54. So we never even saw a downtick from last Friday's close. So we're pressing the high end of this thing, but it's most likely pressed toward the upper end of this range. And I think as we go through the final hour of this trade that we're watching here, is we want to keep an eye on the NASDAQ and see how it trades in this final 45 minutes. I think it's going to lead the way to wherever we're going here. All right. I'm hitting all the. We're going to Tesla, and as exciting as this thing is, if we finish, this is a weekly graph. I remember back here on the 10th, we closed above the grid, and I said we should get 2 to 3 weeks of downside. We did spike up the following up toward the STX, and then we drifted sideways. This pattern here is similar. If we finish above 1840 on Friday, it's Wednesday, so we get plenty of days. If we finish above that number, and especially in this configuration, we're going to see another 2 to 3 weeks of consolidation down. And at some stage, there actually will be a high in Tesla. I know there's probably not 2 people I could convince that that's going to happen. I'm not saying it is, but there will be a high on this chart at some stage. And we're definitely going to see some consolidation if we continue to trade like this. Yeah, so let's take a look at this is a good one. I need to make note of that. Brought up wood, global timber forest ETF. This is interesting. Let's go to a daily real quick on this. I just want to put a model on this. This so reminds me of the S&P. The last buy we had on this ETF, this was on a daily, was at 50.49. And it's been long since the 4th. This is the same time that the trade came in. If I brought up the SPX on here, same trade on 3.2 that came up. So these 2 markets are correlated. Or also that same pattern, if you were watching the first hour, that same pattern that is set up on this ETF is the same pattern that's set up on the S&P, where we have this contracting pattern and probably going to move back into, 47 or so. But let's go to a weekly. I want to look at this. Yeah, so weekly came in here at 50.14, and we're trading above the 200-week moving average. PPMs are very solid. This trade is going to be on for a while yet. In fact, let's go over to WaveTech real quick. I just want to see what the profile says for this. So we went long on 714 at 55.99. This is daily. Let me go to weekly here. Okay, I'm going to go to the trade profile. I want to see what the profile is saying, the holding period, so forth. So right now, this ETF comes in, and when it comes in, it hangs around for a long time. But 70 days of 348. The P&L is 21%. The projected profit is 41% on this symbol. Standard deviation is a 72% gain, giving us a price targets of 74 to 90. And the average loss is almost 10% on this thing. But you're looking at right now about half of the expected returns have already been yielded. And this is interesting. It ties together with the lumber chart. So thanks for whoever put that out there. I appreciate that. All right. So folks, we are going to take a couple-minute break. It's a long plane flight. I'm going to be right back. All right, folks, I am back. So I see a couple things on Chinese stocks, and maybe give me some symbols. We can go through a couple things. I covered Facebook a few minutes ago. All right, here we come with, I have to write these down. The timeline's moving so fast. 1 second here. Okay, I'm just going to go through some of these things. Yeah, good old Baba. That's an easy one, right? Yeah, by the way, the S&P is printing the lows. We're going to flash over just for a second here. Look at this. We're right on the lows. Still printing them down. Still looking for that that 77 number on the cash. We're going to be interesting to see how these things trade here for just a second. See if we can punch out a new low, and the machine should kick in here. Absolutely. Yeah. This, like I said, this could be the beginning of a rollover on the S&P for a 33.20, 33.05. Good. There we are. There we are. Print the lows. Let's watch this. Here we go. New lows coming. Come on. There we go. So typically what you'll see here, I'm just going to go off on a tangent. We'll go back to these other Chinese stocks here in a second. But this could be an interesting last half hour as well to kind of watch into the close. And I will get back to some of these stocks here, folks. Bear with me a second. We are live. Yeah, so we printed a new low, we bounced, and typically what we'll see, especially if the machines are involved. And to me, one of the things, I want to take this off the screen here for a second. One of the things you watch for if you have level 2 trading and you're watching this thing is you'll see above the bid and below the offer, you'll see these numbers come in. And typically when those type of numbers are coming, that's machine trading. Now we just bounced 3 handles. And I'm not seeing, it doesn't look to me that I'm seeing any of the machines in here trading right now. And I thought we might see some of that activity. But you'll get a 300 point rally, and then they'll come back and they'll smash the low again. So we printed only a new low by 50 cents, and then we got a bounce back here. So there is some support, and I'm not seeing any funny signs of any computer trades that are coming in that are smashing the offer so hard. Here they're going to come back at them again, it looks like. But the pattern that usually sets up 200 to 300 points, but I'm looking for these above the ask, below the bid trades, and we're not seeing those. Those are almost 100% machine trades that you're going to see. And what happens there is the system's unable to process them, and it'll show above and below the bid and offer. Let's just watch this just for another minute. I like that green on the left-hand side, though. Working on 20 handles. All right, well, we'll move on. I just wanted to see this action when we printed a low. I think looks like to me they're going to try to hammer through it again, but I'm not seeing it. I wanted to see if the machine, there we are, above the ask just trade. And this when we come in, if we watch for another minute, I'll go back, I'll make sure I cover these stocks. Here's below the bid, just flash by, but it's not big tranches, and usually you'll see multiple tranches, but we're 2.5 handles off the lows right now. Seeing very little. Here we go. So they're going to try to press them here, and you'll watch in the middle section here where the there's a above the bid. There we go. And they're trying to press them. And once you start to get to these lows, if the machines are going to kick in, you're going to see a lot of those come in. So we are now 125 points. We're 5 ticks off the lows here, and just see if they can get a run on these things. It's like for the machines, seeing this 76 low right now is like a shark with blood in the water. They can taste it, and but the yeah, and if you notice the other thing on the level 2, you're going to see all of a sudden those sellers dried up really quick. We're trading at the top end of the range. If you look over on the chart, you'll see we just expanded the range just a little bit as far as the grid goes. But the configuration on the webs, and I'll explain these one day. I promise you we're going to do a day trading deal. But this is, here we go. They're going to press them again. So we're watching this. If we print through 77 here, we should start to hammer this. Look for those above ask, below bid trades. Definitely a war zone right now. And the other thing I pointed out earlier, if you're watching, what you're going to see here is that the bid-ask size dries up completely. There we go. So 77's print, and you'll just see we were looking at 200 contracts. Now there's just nothing there. So this is the war zone. It looks like they're going to push them through, but we'll see. This could be the lows, and if they don't take them out, then we'll probably see some recovery into the close, and then the S&P will end up trading unchanged or something like that. On the end of the day, they'll rally them back. So pressed them pretty hard there, and they weren't able to get the sells, but they're not done yet. So we'll spend 2 more minutes, we'll watch 2 more bars, and then we'll go back to the individual stocks. Yeah, that's a good question, Jay Pash. Yeah, the best of my knowledge, and I've talked to some folks that have run some ticker rooms, that's exactly it is machine, or they are trading above and below the bids. We used to have that stuff on the trading floor where we'd have to post where 2 guys traded, the bid ask was in a pit. This wasn't a digital pit, but would trade out of the range like that now. Yeah, so it looks like we're trying to stabilize here. We'll go back. Let's do some stocks. We'll finish off the day. We'll try to flash back. If you guys will give me a heads up, I get deep into these on the timeline. Just let me know when we're about 10 minutes out. We'll hang out into the close, and then we'll finish up the session for the day then. Yeah, it's there's still a war going on here. They want to print them down. All right, let's go back. Somebody put on Disney. This is a weekly Disney. It targets 156 above the market here. Support levels everywhere. Looking at 119 is a 10-week moving average. That's pretty substantial, but you look at PPM1, 1.06, 133, 134. It's a pretty solid trend. But I think all of these, maybe Netflix and all of these larger end stocks that we've seen move are going to consolidate here. The grid is suggesting that when the grid squares off like that, you get a pattern. Where my cursor is right now, you'll get a pattern like this right now. And our models have not picked up an intermediate buy on this at all yet. So that's interesting as well. So it's at least from a sustainable trend viewpoint, we're not really seeing that. Possibly if I put in a 1.2 model, maybe we can get that. Let me flop over and let's put Disney in and see what. Yeah, so Disney is mapped out to the 3.2 model. No buy there. If we go over to a 1.2, there might be a buy here. We'll take a look. There is. It came in at 119. It's up 7%. If we look at the trade profile, we're looking at from a intermediate basis, 27 days of 150-day hold. Estimate projected profit at 146, 22%. Standard dev is 170, so high end range 146, 170. We go back to TradeStation here. This is exactly what the Fibonacci's are also. So the projections on WaveTech are telling you based upon the number of trades that have occurred and what the statistical map of our models are saying where the price range is going to go. Now we look at the price model, which is something completely different, but they line up 156, 175. Back to WaveTech just for a second. And you'll see 146, 170. So very similar numbers, and they tend to line up with the technicals a lot of times. So, all right, I'm obsessed with this. Okay, yeah, 75 trades, new lows. They did manage to grind this thing out here, but yeah, so we're just not seeing. I have to just on the future side. On the future side, we're really just looking at. Here we go again. There looks like new lows on the way here. Let's see if they can print them through. 75's trade. Yeah, it was like 200 bid there. 150, solid 150 bid. They're working it. Yeah, we'll probably trade this 73-ish if they can break this 75. There's still a solid bid. They're working hard. Yeah, look at that. Down. Here we go. Now it's gone. There it is. 74 should trade 73.50 at least on this surge. We've printed through the STX on the 1 minute graph here. Here's 73.50. Here's 25 ends up showing up. And yeah, I'm loving this close, folks. I know we got a few minutes to go, but I'm loving these prints right now for sure. The yeah, so now we from the what we print 95 high on the futures. What was 95, 75 high, and now we're 73, so we're 22 handles off the highs. Really a nice trade here, working. And yeah, so we'll go back and do a couple stocks. We'll flop back here in about 5-7 minutes. Let's see what else we got here. I wrote down some stuff. NIO. Here's NIO. This is weekly. Very similar. This is actually a dragon formation setting up, which is probably could end up to be negative, but there's at least, this is weekly, another 4 to 6 weeks in this pattern. And yeah, I think that's going to be the trade, right? Hodl miners, definitely going to be hodling those things. Yeah, let's go through some of these stocks, but this is consolidation range. We're printing up at the we got 1469 high on this one. R2 1422, so a little bit above that. 1481 R3. The low for the week 1306, so never a lower print on the week, so didn't have any downside whatsoever here. Yeah, I was talking about you, Jake. All right, so here we are. Intel's hovering around. We talked about this last couple of weeks. It's hovering right at this 200-week moving average. That number right now is 47. Is that right? That number is 47.56. Trading 48, just hovering right above that. There is no reason to own this stock. I did get a new computer and I got a Ryzen 7. Pretty impressed with it so far. It seems to run I think it's running maybe a little hot. I was looking at some numbers the other day, but this pattern is definitely, it should hold here. PPMs are way negative. You've got heavy resistance 53.95. $53.95, and so you're going to be sandwiched probably between the 200-week and the 10-week moving average. So that sandwich is going to be roughly 52.48. So several more weeks of consolidation here. It would be almost wrong not to bring up AMD. Look at the difference in those two chip companies, right? AMD is entering into a large range. The last time we had a buy here, 52.34 is trading 81. We're going to see a large consolidation here, and that will represent the probably a minimum of another 2, maybe 3 more weeks of this before we set up a pattern. Got to bleed off some of this extreme momentum before this thing can recycle and be ready to move higher. Yeah, what I don't, I'm not Mr. Wizard here or Jim Cramer, thank God. But what is CLT? What do these guys do? Whoever asked for that. Just curious. But anyway, yeah, we're punching through the extreme on RXT. I'll probably be embarrassed after asking that question. But this is RXT was 145.37, 154, just like in Tesla, just like in these stocks. If they finish here above this one, so you might want to note this 145.37, we finish higher than that, we're likely to get 2 or 3 weeks before we see any of we'll backfill. What I'm trying to say here, we'll get some backfilling here for a few days. Now we got 13 minutes to go on the futures. We're trading 70 now. Got to flash over for just a second. Yeah, we just printed new lows again, so they're definitely pressing this thing. And one of the things I mentioned earlier that we're going to want to watch I'm going to do one more stock, and then we're going to just hang out and watch this close together. This is going to be an interesting one. Okay. All right. Thanks for that. Yeah, here we are printing 70s again. Let me get rid of that. There we are. New lows. Yep. Yeah, down 17 handles now on the E's, on the E-minis, and they aren't done. Definitely seeing blocks. I think the machines are definitely involved coming into this close here. We got 12 minutes to go. And one of the more interesting things to do, so I'm going to do one more stock. We're going to come back to this. We're going to hang out to the close and watch this level 2 trade. And I want to explain some things here, especially once we hit the close, on the S&P when the cash closes out, and then we can watch just the futures activity in that next 2 to 3 minutes. So we'll hang out and do that together. Let's go back here for a minute. We printed 68.50 on the futures. Yeah, so here's CLE, Clean Energy Fuels Corp. This is a weekly. Huge PPMs on all this. Last buy here, I do have a 3.2 model up. I'll bring that up in Wave Tech here. So we're looking at a buying a stock at 211. The grid is flattened out, so we're probably going to be locked in a range. We're going to remain above the 200-week moving average. Let's go over here and take a look real quick and see what the models are saying. Clean energy fuels. I actually have a really interesting something. I can show you this, but we'll wait. I want to go back to the futures and hang out for the close. So we got a price entry 260. Yeah. So weekly 1-2. That is the model. That's what I was looking for actually. So this is on right now. This is on a 3.2 model. So yeah, here's the buyback here on 1-2 at 211. So yeah, all this looks pretty good. There are no Fibonacci projections right now, so it's kind of tough to come up with anything. The grid squared off. That tells us we're probably going to be in a consolidation range for maybe a week or two more, and then maybe it can resume its way up. All right, what time is it? 9 minutes to go. Let's watch these futures close. Let's just see what we can Well, we can talk about that. Yeah, real quick before I do that, I see some stuff on the timeline. This is a weekly VIX. This is not the futures. This is the cash. Let me look here 1 second. Interesting. We just had a cycle come in on the VIX here, which tells us there's possibility of a spike. There's actually no current position, at least on a 1-2, and that would be something to watch in WaveTech. For those of you using WaveTech, watch for this buy. But we're really close to a signal here on the VIX. And I love it now because the INX, the SPX is printing 73. Let's bring that up real quick. INX at printing 73. That is the magic. We printed S3. Somebody called it earlier. Good call. That they want to print the S3 number 3369.47. The low 3369.66 has been the low. That was a perfect hit off S3 on the cash. On the futures, let's see what we have on the futures. Have a little 68.62 is the number 60. Yeah, so we printed between S3, STX on the futures, but the cash was absolutely nailed it. And I still think using the cash SPX numbers are really good for correlating with the futures trades. Okay. We're going to go back and watch these last few minutes here. Yeah, so we bounced off 65. We're 71. Be interesting. We got 7 minutes to go. See what kind of configuration we get here. We are seeing machines are definitely involved here. And typically what we'll get on, especially in the big sell-offs, we'll get a 33, maybe we'll get a 3 to 5 handle rally, and then it'll go back and retest the lows. This close to the close, we probably saw the print of the low of the print for the day for this session at 33.65.50. And then we'll see what kind of formation we're setting up right now. This is not a and so I've set myself up. So we're going to have to do a day trading session, and we're going to talk about the webs, all the elements you see on this page. And the webs are telling us we're going to print back here at, I'll give you a number. We're probably going to print back into around 68, 67 and a half. We're trying to move that way right now, and we'll see what kind of configuration comes out of here. But we're probably going to remain below 73, 74, no matter what happens on the close. But it looks like we're going to print down into 68.50. If we don't hold that, then they're absolutely they could sell this thing off into the close. Sorry about that. Yeah, so here we are printed that into that 68 range. We're now starting to set up a pattern that we could print 73, 74, but we'll see how this thing sets up here. Just a second. Okay, now all of a sudden the chat's working on this page. This is good. Okay. Yeah, here we are. Yeah, this is probably going to be a grinder. We got 3 minutes to go. We just rolled over the clock. One of the things I miss from the floor trading days is the 5 minute, the 2 minute, and 1 minute bell. It brings a lot of excitement into the trading floor. Yeah, I would think. I think we got a pretty good shot that we just saw the high of the sequence, and this is goes through. And if you just join on this live stream, watch the replay, watch the first hour, and also go to our channel. And if you're not a subscriber, please subscribe. We're right at 20,000. We need about 280 more folks to join us, and we'll be at 20,000 and beyond. So that's really cool. We grew this thing completely organically, which is pretty exciting. So here we are trading 71, looking with less than 2 minutes to go here. I think the high end of this thing, if it prints up, is going to be around 73.50 or so. Doesn't look like they're going to make any big decisions on the close, but it looks like there's a slight bias to the upside here. Just looking at the webs and the way they're forming here. So we're pushing 72, 72.25, and yeah, we're going to move 70, 73, 73.25 at least here. At least they're trying here. I'd like to see them just smash these things into the close. Yeah, here we are. There's 73. We're coming into the close. We're in the final minute. So this is where the game's played. We printed 73, not much above that. That's where I thought we'd get 73, 73.50 maybe on the final close. You'll also notice if you look at the level 2 on the far left-hand side, you'll see some bid size really increase. It's not really getting the type of numbers that normally it'll get 400 or 500 a side. We're getting about 200 a side. So no real press job. There's no excitement. So the bias looks like to the downside in the final trades here. So range, I think 71, 73 on this closing range. And now what we want to watch right here, that's the close. And when this thing starts ticking again, we want to see if we get any short covering out of this thing. That'll tell us a lot about what's going on. And right now they're pressing down at the lows. So look at that, 68 prints. So we're getting some liquidation after this. So this is interesting action. We're likely to see, I don't think we'll make a new low or anything like that, but there's definitely not any big short covering. A lot of times after you see a downward day like this, well, once you see that, if there's going to be any nervousness or short covering, you'd see that right now, especially in this next 2 to 3 minutes. And right now we're actually seeing more selling coming in. So it was like, okay, let's see how the cash settles. And there's still more sellers out there, what it appears right now. So this is setting up a little bit of the overnight session, not a lot, but we looked at around 68 print. We're back at 70. So 73, 71 closing range, and then and round numbers, and now we saw a print down after that. Let's do a quick review. Let me take off some stuff here so we can just see exactly what we got going on. So the 10-day moving average or daily, wait a second, let me go to cash. I want the cash market here. The 10-day moving average, 33.66. We finished at 33.74. PPM 1, okay. This is pre-video stuff for tonight, okay? The 10-period moving average at 33.66, it is still rising just slightly. It's rising at 0.14 now after today's close. So what we're going to see on this thing is that tomorrow, if we take out the 10-period moving average, we're going to move toward the 33.12, 33.05 level. Yeah, the PPMs are all starting to roll over. And yeah, everything that this goes, you know, so like I said, if you came into the end of this live stream, we've been live for 2 hours and 40 minutes. And if you just came into the end of this, then watch the replay. The first hour I went through a lot of details on the S&P, and this was when the S&P was still trading higher. We were talking about a number of things, but how the markets are relaying. If you came here, you haven't watched the videos on the channel, go do that. Watch the last few nights. You see I've been talking about this thing getting very close to rolling over. And now we're looking at the yeah, now we need to look at, you know, at just how much it's going to roll over, what happens to some of the other metrics over the next couple of days. Yeah, is that what I get, a silver badge for 20,000? Yeah, give me the silver badge. You guys pound the like sign if you enjoyed this session today and all that stuff. We're definitely at the end of the show. So I'll come back on screen and say goodbye to you guys. Haven't been on screen here for an hour or so. But yeah, I just really appreciate everybody showing up. These sessions are awesome. I wish, you know, I'd love to be able to do this every day. These are really fun. And, you know, just like I've talked about before, you know, a couple ways to support the channel, obviously super chats, but the primary way to get involved with us is actually signing up for the WaveTech tool. There's no free trial, but there is a proration of the month. Right now we're at the 19th of the month. I think it's going to be $42, $3.12 a day. You can sign up, you can get into the product, start to look at some of the videos, how to use it, how to build, how to look at models. There's 16,000 symbols that we cover, 16,500 and change. And there's a lot of information. We do training on there. There's a lot of things that you're going to get into the process that we're providing. And the big thing about just the signals is actually learning how to build your own personal mutual funds. If you watch yesterday's broadcast that I did on the WaveTech, it's on our channel. You watch that. There was a lot of information there talking about how to build your own personal mutual funds and getting rid of anybody that's managing your money, whether it's a mutual fund manager or ETF. One of the things that, you know what, I think I will show you something. I'll see if I can bring it up on another screen here. Bear with me 1 second, folks. Yeah, I'm trying to find something on the screen here. Just 1 second. Hang on with me. Hang with me. I'm just poking through something over here trying to find. All right, I've got it. So what I'm showing you here, this is what you can do, and this is our portfolio expert site. When you start to get into a multivariant looking at things, and Jay built these, and what we're capable of doing, this is the point of getting rid of ETFs, getting rid of money managers in general, is being able to do these things yourself and eliminate all the internal fees, no matter who you're dealing with. That is the goal here from the standpoint of stuff. And Michael in Israel, I'm going to reach out to you. So try to stay awake for a few more minutes. I will reach out to you after the show, just so you know. So in the, but this first bridge, this is the first bridge ETF. And what it was, we took all the clean energy. So somebody asked about the clean energy company. This is a combination of a bunch of stocks in the clean energy sector, but it was, we have a firm that it's actually First Bridge, they're out of India, that we've used, and they keep all of the constituents from the, they keep all the constituents of every ETF out there, not just the clean energy, but everyone. And so what we can do is we took the constituents and we built a custom strategy, clean energy strategy. This thing's up 75% 2020. Okay. But let's just go year to date, and we'll compare this to the S&P 500. You can just see how it's done. It's up. Make sure I got the right thing here. There we go. Now we got it right. It took, so this chart here is actually, this blue line is the clean energy ETF. And this is a combination. We took multiple ETFs, took the symbols, and Jay could actually, if he was able to talk on here, could tell you exactly. He built this and was able to take those symbols and compile them into a strategy. And then what's happened here is you eliminated all of the ETF managers' fees. You've eliminated everything. You should have, if you don't have, you should have a broker that charges no ticket fees. And hopefully you even have one that you can do fractional shares. So you can build these things. Now this one is trading, this is a multivariant trading on 3 different levels, all on every symbol in here is trading daily, weekly, and monthly in combination within a larger pool of assets. So when you're looking at the pie chart, the whole pie, there's dynamic elements going on. So when you look at a scatter graph of all the buys and sells in here, there's a lot of dynamics that are going on. And so we're bringing this stuff to you folks soon. I'm working on a final project. There's 2 projects that are like pushing on ropes right now. And when we were building our new website, we had the same experience. We thought we'd be done next week. We finally got it done. It just, there's a lot of little details to make it ready to get out there. But so everything that, you know, this is exactly what I'm talking about. Building your own personal fund, building your own individual mutual fund or an ETF, getting rid of internal fees, no cost trading, fractional trading. That is the future. There's a lot of things going on here. But I just want to thank everybody for coming today. It was awesome. We did almost working on 3 hours, 2 hours and 48 minutes. So really appreciate it. I guess that's since I brought up the entry screen. But you know, it's always a great pleasure. Like I said, you support us, sign up for our products. There's going to be a lot of things. We are working on Market Grid. I see some folks comment about it, getting these grids out. I did do some substantial stuff. I'm hoping that this afternoon I'm going to have an opportunity to actually test some of this new stuff and work on getting it rolled out. So anyway, as always, thank you for watching. Thank you for being a subscriber to the channel. Make sure you smash the like button before you leave, and we'll see you tonight on the usual videos. And we do Tuesday live cast for training for WaveTech, and then we do a live cast on Wednesday every week. Same time, same station, 1:30 New York time every Wednesday. Anyway, folks, thanks for watching.